Hi everyone, hope you're all doing well, and today we're going to talk about GAN earnings that came out yesterday. The numbers were very impressive last night. We'll go through all those numbers in those earnings and a few key points from them earnings. It was very close whether I cover on YouTube the GAN earnings or the GNOG earnings. So we're going with the GAN earnings on YouTube, and then we're going to do the GNOG earnings on Patreon. So you guys on Patreon, that should be up anytime soon. I don't know which one will be up first. But yeah, if you do want to see my opinion on GNOG earnings, join the Patreon. Link is in the description. There's also a lot of other exclusive content on there. And if you could smash the like button, and if you're new, subscribe as well. But yeah, we'll cover GAN earnings on the YouTube and GNOG earnings on the Patreon. But yeah, we'll get stuck into it. So I guess the main things to go on about GAN is that this earnings call was probably the biggest earnings call of Q1 for me. This was what I invested into GAN for like the last couple of months. I wanted to see it start playing out in this quarter because of the big massive launches that we had with the GAN platform in a lot of the new states. And it delivered. The earnings were fantastic. They were as good as what I could have hoped for. And we got the hint with DraftKings. We looked at DraftKings numbers and we thought, okay, the numbers are strong. GAN should deliver, and they have done. And the numbers they put out were so impressive. And this was a company that I was kind of looking at now, and I was like, I was a little bit looking at it going, okay, it's got to deliver this month, and if it doesn't deliver, I've got to consider maybe selling my position. And after these earnings, I just went, no, they've done what I wanted them to do, and it was fantastic. And once again, the stock prices are just absolutely crazy. I think last quarter, the stock actually moved down like 10%. I think it was even more than that. I think at one point, GAN, it might have been tied in with a lot of these valuations correcting, to be fair. But yeah, I think the stock price went down like, at one point it was down 17%. I don't know, I can't even remember what it closed out last time. I think it might have been down 10%. And that was a quarter where the growth kind of slowed down a little bit. They've had a few things where, there was a payment missed, and there was a partner as well that didn't carry on going forward. And, the revenue kind of grew at 10%. It wasn't amazing. I think there was a slight EPS miss, but they raised the guidance a huge amount, which they've delivered on and in fact beat. And the stock got absolutely punished from it, and it was like, but you're kind of not thinking about what they're about to deliver in the next year, and it was just crazy. But the stock price, once again, it just didn't do anything, and the stock's actually down 1%. And these guys have just put in over 200% revenue growth, and then even raised the guidance going forward. There was a slight EPS miss. It was only a small amount. I think when you're growing revenue at this sort of rate, you can be a little bit generous with a little small amount of EPS they missed. It was nothing. What the revenue they put in, what guidance they've put in, and they've said that pretty much profitability should come back at some point. This was a company that was pulling in a little bit of a profit, and with them scaling up so much, which is shown on the revenue side of it, which was fantastic, we can have them a little bit of leeway where they've put a lot of money into the company. Let's not forget as well the purchase Coolbet as well, which in this quarter again was showing really good numbers. So we'll let them off on that kind of front, and towards the back end of the year we'll go back to hopefully seeing some profitability, and we'll judge them a little bit more on that front a little bit later down the year. But right now, what we're seeing, which is putting that money into the growth side of it, phenomenal amount of growth. And the stock price for me was just absolutely broken because, this stock is so low at the moment. It's trading at such a cheap price to sales ratio, and with the numbers it put in, how many companies do you know at this sort of range have an amazing balance sheet, will be profitable very soon, and growing at like 263%. It was just crazy. So yeah, the growth was absolutely fantastic. What I wanted to see from this company, I thought it would be obviously in the 200% range, but 263 was great. The thing as well is what is happening as well, this valuation is just nuts. It's trading like a 6 price to sales ratio at the end of the year, and it's such a crazy valuation. For a company putting in this growth to pick it up at this valuation is just nuts. I think the only other one that is very similar is like Tattoo Chef, which I think trades at like a 5 or 6 price sales ratio, very similar to this company. But that company is growing at like 50-60% revenue growth. These guys are just growing at 263% growth, which kind of shows the difference. Even other companies like Palantir, I think that's a classic one of that was price sales ratio of 44. I think it's come down a little bit now. It's like 30 something, maybe like 35 or something. But that just grew at something like a 70% rate. And we're looking at a company that just put in 263% growth. and is at this sort of valuation. This company should be a $20 to $30 stock, easy. That's like fair value, and what it should be further down the line. I'll talk about it a little bit in the end where I see this company going, but it has massive room to grow. So one thing in the earnings part is that it did partner up with Ainsworth. This gives it more content on the platform, so developing more partnerships, which was really good. It said that West Virginia just launched. I think it said that it was at the start of this month, which is obviously May. So I don't think there's any West Virginia numbers in this quarter. So what would be very interesting in Q2 is that we'll probably have a new state launch in this quarter. There'll probably be a few more state launches as well as we go on. But yeah, obviously West Virginia, and obviously I think you got like FanDuel in there that they use their platform. So Q2 could be very interesting. The only little thing is like the difference in the sports calendar, because normally this part of the sports calendar is a little bit quieter, but there's a few more sport events because of the CV developments and everything like that. So it'd be interesting to see Q2 numbers. I think they said on the next Q2 will be in August time. But yeah, I think that was another launch that we haven't seen just yet, but will be in the next quarter. So yes, developing more and more states, so the revenue should look more and more impressive as we carry on going. I think at one point they actually went on to say that with their clients at the moment, GAN in its area as like a platform is the market leader, but as an actual the betting side of it, I think all their clients now make up 20% of the market share of the space that they're in. So that was really good. When I think about it, and I think, okay, I got DraftKings, which control a massive amount, and then all the other names that come under GAN that use the platform, like WinBet, you've got like FanDuel, Penn National, Churchill Downs. There's so many people that use their platform now. I thought, I got quite good coverage under this one, so it's good to see. Like, I obviously want DraftKings to do well, but obviously all the other companies probably still do well as well. But I've got such a diverse. By having GAN, you have such a diverse. It's kind of like owning all little parts of all them companies. It's a bit like a ETF under one name, I guess, which is pretty cool. Once again, what we've heard pretty much from like everyone else that's in this space, like DraftKings, Michigan numbers were really strong. And the thing about this is that like when a lot of these companies have been through like the New Jersey launch, which was like the first state that allowed a lot of this, and then what they do now with Michigan launch is that what they're seeing is the Michigan launch is stronger than what they had in the New Jersey launch a few years ago. So where they expected to be maybe in Michigan in like 2 years' time, they're like already achieving that right now, and that's the demand. And then you think about, okay, if that's how much demand there is now, you imagine you put that towards like every other state launch. If they could live up to that, the numbers are going to be pretty crazy. And so we're trading a little bit further ahead than what we thought would be. And what everyone is kind of saying now is the TAM's growing. Like what everyone thought would be like the total addressable market right now, we're going further down the line, and it's pulling it forward because it's actually going to be bigger than what it is. So a lot of these companies where you think, okay, this is the ceiling where the market grows, the ceiling's just gone a little bit higher. So everything from that point of view is kind of what we've heard as well with DraftKings. So I didn't want to focus on that really too much at the moment, but the numbers are still pretty strong that are coming from these guys. And I guess the only one negative that I could pull from this actual conference call is about the win side of it, and the analysts actually did pick up on this, is like, I was kind of hoping that with this success, I think WinBet is actually spinning off as a SPAC stock now, the WinBet side of it. But I was kind of hoping, like at the moment they're tied to like a 10-year partnership in Michigan. I was kind of thinking, well, if Win have been this, because Win have been very aggressive in the space right now, and I thought, well, if it's been successful, the launches have been so good, hopefully Win start using GAN's platform outside of Michigan. We didn't get anything like that, which is, I think Win could be a major player in here, which didn't happen, which was something that I was kind of hoping they did, and develop them partnerships a bit more. But that didn't happen. I guess that's only one little negative I did have from it. But yeah, overall it was a pretty good earnings from these guys. It's what I kind of wanted to see. They achieved it all. I guess the only thing would have been is if the EPS did come in line, I guess that would have kind of, I don't think the stock would have gone up anyway with what kind of market we're in at the moment. But I guess that would have been just, a blowout 10 out of 10 earnings. I guess with the EPS side of it, I would just give it like a 9 out of 10. But I'm not, like I said, I wasn't too fussed on the EPS side of it. The big thing was to see growth, because I think last quarter was like a like a 10% revenue growth, and I thought, you know, there was a few things coming into effect, and what we want to see is just this platform carry on growing and growing and growing, and they did massively achieve that. And I guess the kind of like what it comes down for me is that I'm still thinking this company should be like valued somewhere between like a 5 billion to 10 billion company, which is a massive upside from where it is right now. And hopefully, it's a lot of the partners it has down. It's still tied down for a major contracts. So one of the big things that I am always worried about this company is that it loses clients, and that affects the revenue, because the last thing I want to be with like a platform and GAN. The difference between like GAN and DraftKings is that DraftKings owns its branding and people will just keep coming to DraftKings, whereas GAN isn't like a brand, it's the platform. So if a platform that a brand that uses GAN want to go like vertically integrated and use their own platform, then that will cost GAN, and then, you know, gaining a client and losing a client just balances it out when you don't grow. And that's what I don't want GAN to get in a position in, and that's my only ever worry that I do have with GAN. It's not too bad because they have so many clients now, but it's just one of those that, you know, you never. I remember I used to work for a company that basically celebrated every time they got a contract, and every time they got a contract, they lost a contract. And I was like, but you're not really going anywhere. And like the company like never went anywhere; it just like stayed flat, because that's what happened all the time. And I look at GAN, and I always look at it in a very similar way, that I don't want it to be in that position. But at the moment, a lot of its contracts are pretty new signed contracts, and a lot of them are like long-term agreements out like past, you know, 2024, 2025, and that gives me a lot of confidence, and that's the only little risk that I have with it, because we saw what happens in like Q3 and Q4 when GAN can lose a contract. It slows down that revenue growth a little bit, but at the moment it looks all pretty good from that front. They've got the contracts tied up. For me, I still want to see, I've held GAN since, you know, last year now. I still want to kind of sell out a GAN like 2023, 2024, maybe 2025, somewhere around there. I still think DraftKings is my number one position in this area, but I look at GAN with what they are doing. And you know, the thing is, what I just said there about negative, it's funny because it actually works as a positive as well, is that you have so much, you know, you don't have one client, you have so many different parts of clients, and if they carry on growing, then they make more and more revenue, I guess. But yeah, for me, I always look at this one and I think it definitely has a lot of potential, and it's with what it has with Coolbet now, makes me a lot more confidence. The numbers from Coolbet were really good as well. So yeah, you know, you've got your B2B platform, your B2C platform in there now, and it's getting. I think GAN have kind of realised that, and I think that's kind of diverse their revenue a little bit. I think at the time when they actually acquired Coolbet, a few people were kind of going, "Oh, that's a panic reaction to like." I think it was FanDuel, like they lost the sports betting side of it. I think it was on FanDuel, and people like, "Oh, that's a panic reaction." But you look at what numbers they've just put in with Coolbet as well, and how much revenue that will make up of the company. That looks a very, very good purchase right now. So yeah, I think GAN have kind of tackling that situation as well. So yeah, overall, just very, very good numbers, very good how they're delivering things. And like I say, I'm still very much holding this one for at least another 2, 3, 4 years now. And yeah, for me, I'd definitely somewhere around that 5 billion to 10 billion company is where I see it. You know, I think it could be a company that at some point does put in towards a 1 billion amount of revenue. We'll see what happens going forward and how many state launches happen. But yeah, I was really happy with this company. So yeah, let me know what you think. If you found this video useful, smash the like button. If you're new, subscribe. If you do want to see the GAN Earnings ones, it's on the Patreon. So you guys on the Patreon, that should be up at any time as well. But yeah, thanks so much for watching, and I'll see you next video.